Good afternoon, everyone. This is Mike. I'm with James again for episode 2 of the Broker Breakdown podcast. Super excited to be here this afternoon. We know we did our first episode there last week and kind of explained who we are and how we got into the business. And today, me and James are going to do a little bit of something different. We're going to get into some content, talking more about homes, replacement costs, kind of current state of the market, and kind of everything related to just that home kind of price breakdown. So yeah, I'll let kind of James get into his points here, and we'll start off.
No, I'm really excited about this one because this one's obviously a hot topic on the market right now with homes obviously increasing across Canada, and obviously Ontario seeing a lot of those increases as well because we are the biggest province in Canada. But again, we also have the biggest population. So we are facing not only just Ontario, but the whole country is obviously facing huge problems when it comes to homes and rebuilding costs. And obviously those factors are going to impact insurance. So a big topic for today. And like I said, I know me and Mike actually both deal with real estate guys and mortgage people, and they've kind of seen the same thing. And even from my own kind of personal experience, I've seen homes just sit for months, if not years, even prior to COVID, just because of how much things were increasing prior. So this is kind of what we want to get into for this week. So we'll have Mike kind of go over some of his topics here. And Mike, I had this actual news article pulled up, kind of going over some stats, and literally just from last January to this January, so 2021 to 2022, we've actually seen a almost 6% increase on rebuilding costs just in 1 year in Canada. Can you believe that?
Yeah, it doesn't surprise me. It's one of those things when you talk to anyone around right now that's doing any type of renos or even guys in the business doing new builds and contractors and whatnot, everything has increased right across the board. I know there's a ton of different factors going into that too with, world economics sort of thing. But yeah, man, it is super expensive. I was just actually doing my basement right now, and it's part of that process. Just obviously picking up some drywall and lumber and everything else, and just the price of a couple 1x3s we've been picking up. Just it's funny to see kind of prices when you talk to when you're any family that's been in the business, right, or buys things regularly. Everything they're just flabbergasted by. So it doesn't surprise me that when we're talking about massive insurance claims and total losses, right? That the overall rebuilding cost people houses have just skyrocketed.
A little bit of an inside joke for everyone. When I first started a big, there was a little bit of a conversation with Mike because his wife wanted to make sure that he had enough electrical outlets. I think it was behind the bar, wasn't it, downstairs?
Yeah, we've had lots of conversations on the electrical stuff. I got enough outlets right now in my basement to run a small little insurance company downstairs right now. But we want to have them every so often. We don't want to go through the thing of redoing a basement and then 5 years down the road
again,
you're trying to put you're right. You're putting a computer station in somewhere. You're doing God knows whatever, and you're running 2 extension cords across the entire basement just to do it because you didn't want to spend a couple extra bucks, right?
I hear you. But so how do we a lot of people are probably going to ask, how is this all going to tie into insurance? And the biggest thing is obviously rebuild cost is a huge portion of the home insurance side. And a big misconception a lot of people have is that just because real estate increases, that is not a direct impact on home insurance. Now, the rebuild cost obviously is going to impact real estate. There's no question about that. But just because your real estate is increasing doesn't mean your insurance rates are going to increase. We've obviously seen massive increases in the market, and I get this question all the time. Well, I paid $1 million or whatever amount for my home, and you're telling me my rebuild cost is only $500,000 or $600,000, whatever that number might be. But a lot of the misconception that we're having is that people are only putting the value on the actual property or the actual building itself. What people are really missing is that the land that building is on is obviously worth money too. So you can't look at just the building to go into the rates of real estate. You have to look at it all as land and the building, because obviously land prices are increasing, the rebuild costs are increasing, but the rebuild costs on insurance is only going to go to the home. It's not going to go to the whole real estate price as a whole. And Mike, I know you've probably had people ask that question. I haven't had it recently, but I would say like when COVID first started, I did have it a lot because people were seeing that huge increases on stuff. And obviously homes over the last, I don't know, probably 8 years have always seen increases on the insurance. I would probably think you would agree on that as well. We don't really see decreases on homes a lot. And there's a lot of factors, not even just because of the real estate markets and the rebuilding costs, but there's other factors. But yeah, have you seen a lot of clients ask that question or kind of be a little bit misguided when they're paying or buying for a home and they kind of get their backs up a little bit?
Yeah, so in my experience, one of the biggest things, because I think home insurance, everyone focuses on, what the actual dwelling amount is. I think that's a big, if you want to compare truly apples to apples on home insurance, you really got to discuss like what's that rebuilding cost amount, right? And between what we do as brokers from one office and what the rest of the industry does, it's not standardized, right? There are lots of different. Every agent, every broker could have a slightly different way or a different program, I guess is the best way to put it, to kind of come out with what that estimated rebuilding cost is. And I mean, very rarely, on occasion it happens, but if I'm quoting out a home for someone and we're going through like the 5 or 6 major things that go into the rebuilding cost, right? Age, square footage, bathrooms, garage, construction materials, a lot of the big things. One of the things that very rarely happens is that the rebuilding cost on their current insurance policy is not the same as what I'm providing in a quote, right? It could be higher, it could be lower. And that's where the talking point starts, right? Because people start at that point asking questions, why is this more? Why is this less? And then you kind of have to go through that experiment and explain to the best of your ability why that might be the case. Now, obviously, me and James, can only attest to what we utilize while doing these evaluations, because every again broker and or agent will have a different way, and even again a policy renewing is going to be different. But to kind of go back to your point, every single rebuilding cost evaluation, especially on a renewal, is going to be a different amount.
You can see it from year over year, even on a renewal. Even if I don't touch a piece of business, the renewed rebuild cost is always different year over year because things are always changing. And especially moving companies, because every company does things differently, you're going to see places have a higher or lower rebuild cost because everyone uses different programs. Even in my time, like I've been at 3 different insurance companies, 2 direct writers, and now a brokerage. We all use different programs. There hasn't been one single program that has been the same. So you get these different factors when you're putting in all the rebuilding costs and all the materials used for each different company. And then that's why a lot of things are skewed. Because everything's not the same. Like there's no, like auto insurance is very, very regulated because obviously it's legally you need to have it. Home insurance, on the other hand, technically you legally have to have it if you have a mortgage, but after your mortgage is paid, you really technically do not need to have home insurance anymore. Anyone that doesn't have home insurance after a mortgage I think it just is playing with fire, but that's a whole other conversation. But it's not as regulated. There's different programs you can use. Like I said, every company has their different programs, and obviously that's going to skew the results that you put in because everyone's programs are different.
Yeah, and you know what? So, and everyone, again, I can only really attest to my few experiences, right, from being on the broker side of things. But I know a lot of us use a very similar program that has, those 7 or 8 important factors, right? To how a dwelling replacement cost is calculated, right? And there's going to be those major things as I just touched on, right? The age of the structure, what's the square footage? Is it, 1 or 2 stories, the garage, bathrooms, basement? Those are really the big key things. So actually, it's funny because a lot of people always want to tell you about their, they updated the windows and things like that. If I just was thinking about this, a few of those odd things that we don't really care about that. And again, the insurance company doesn't, because it doesn't really have any impact in that rebuilding cost. But where I was trying to go with this was that the overall rebuilding cost you see on a piece of new business. So if me or James, writes your home insurance and we have that calculated, when your policy comes up for renewal, you're typically going to see, and I'll throw a number out there, about maybe 4 or 5%. You're going to see about 4 or 5% increase on your home year over year annually.
Yeah, and that goes straight off of what all these reports are showing, that even just from 2021 to 2022, their average rebuild costs in Canada have increased 5.6%. So to be in that kind of realm where your rebuild cost is increasing 4 to 5% on your insurance every year is really sticking with the patterns that we're seeing in the market right now with how everything's increasing.
Right. It's basically just inflation 100%. At that point. And I mean, for anyone listening that doesn't get it, or maybe doesn't agree with it, the insurance companies typically do that to keep up with inflation. So if your home policy, renewed at, that 5% higher, it was 300 and let's say 80 last year. Now it's 405,000, just throwing some numbers out there. When you call in to discuss it, I'm going to explain kind of why that's the case. But the reason the insurance companies do that is to, one, keep up with inflation so that the home is properly insured for, estimated rebuild costs with all that happening. But also it's, it has to, because over a 20-year period or even a 10-year period, for that example, if your home never increased and those costs to rebuild kept increasing, how many insurance companies would be vastly underinsuring people's homes right across the board? People wouldn't know. It's not the client's job to know. It's us as the brokers and the companies, right? To put a program in place.
And that's why it's always so important when you're doing a quote for new business, or even if you're just kind of like reviewing a piece of business, is always to ask about any updates or anything done to the home, because that is going to obviously impact the rebuild cost. If I just throw in like regular fixtures in my home, like that's obviously going to cost a lot less than if I put in all premium quality fixtures. And if I'm just telling them, like, I'm not even like disclosing that information, then obviously my rebuild cost is going to be a lot lower than if there is a claim and they're not going to give me the premium fixtures that I had in the home prior. Then really the only person you have to blame is yourself at that point, because you just didn't disclose it, right? And that's what a lot of people don't understand is, yeah, there's a lot of questions, but again, we want to make sure that the questions are answered properly so that the rebuild cost is going to come out to what the actual market's showing. Because realistically, the system's not like foolproof. Like I can put in whatever I want to put in, and at the end of the day, like if you want to change things to make the rebuild cost lower, you can, but at the end of the day, like that's not protecting your client properly. At the end of the day, that's really just only hurting them, because if there is a claim, they're not protected properly in any way.
Right. And you know what, I'm glad we're doing this podcast for this exact reason, is that someone's going to listen to this and kind of not know the questions to ask. And certainly not all people out there will ask about those types of things, right? A lot of homes are very generalized, which is fair. A lot of homes out there have like all the standard builder grade stuff. But if, for example, there are people that have, and I mean, even above the custom built, right? Where the ones where you get to pick all of your, I guess bathrooms and kitchens are the two that always stand out in my head. But if you're building a very custom built home and you have, I'm not even sure, but some over the top type of things in the bathroom and kitchen, and or if you have, I mean, any of the non-standard things in homes, right? So elevators, for example, those, you don't, but you do come across them from time to time, right? You get some nice kind of VIP clients that do have that kind of stuff. I mean, those type of things aren't in a standard home. So going back to what we just said, if you have the standard 5 or 6 things we were just chatting about, it doesn't really ask about these off color additions, right? That people do to their house.
No, and I think I want to make something very clear is that people, I don't want everyone to kind of misconceptualize this, but yes, obviously homes that are worth more and are valued at that price effectively are obviously going to cost more on insurance. Do not get me wrong on that. There are homes out there that are $3, $4, $5 million, and obviously you're going to pay more on insurance on those kind of homes than you are on like a normal home. But at the end of the day, like for example, me and Mike are both from Southern Ontario, and we've seen these massive increases. Even just for myself, I live in Hamilton, and even just the average home in Hamilton, maybe 5-6 years ago, was like maybe 300,000, 400,000 at max. And now for these small little wartime homes, your minimum you're going to be paying is like 700,000-800,000. So I think in that case, like, yes, the real estate value is not impacting that one, because realistically, to rebuild that home is truly not what the real estate value is. But on the other hand, when you're building these custom built homes, these massive 3, 5, 6,000 square foot homes, and they're valued at $2, $3, $4, $5 million, yes, there's the rebuild's obviously going to be a lot higher. So that is kind of the only time where the real estate prices obviously are going to impact. But based on COVID increases and the inflation on homes, we've kind of seen a very misskewed real estate market where people believe that these homes that are paying $900,000 for are only being insured for $300,000, and people are really raising the question of, why am I only insuring my home for $300,000 when I just paid $900,000?
Yeah, it's a big thing, right? The actual cost to rebuild your home, which is, keep in mind, that's the premise of insurance, right? Is to indemnify you as the client, to put you back into the same position prior to when the loss happened, right? So the whole premise is, if your home unfortunately burns to the ground, I think in a lot of different cases, and I don't know this to be fact, but I think a lot of different cases, you can usually keep the foundation. I don't know how many actual insurance companies have to replace all that, unless it's a.
It really depends. It really depends on the kind of the claim and stuff. Like, it would really have to be some absolutely crazy claim for the foundation to be fully destroyed as well. Obviously, because it's like most of the time it is concrete nowadays. Like, you might get the older homes that are like concrete blocks, so the blocks can get a little bit destroyed. But most of the time, like a laid foundation for concrete is usually not really going to be impacted. But you never know. It claim by claim, right?
And that's kind of where I was going, right? It was like, when you rebuild that home, obviously you have that foundation. I'm assuming a majority of times it's still going to be usable. The insurance company is going to make sure it's obviously structurally sound, but as part of that claim, they're rebuilding from that part, the ground up, right? So yeah, the land is not, you're not losing the land value, right?
The land doesn't just disappear after a claim, right? It's not really, you can't really impact the land in any way unless like a bomb hits it or something, and then there's a huge crater. So that's another big thing, is that there's no way to replace land. Like, the land isn't going anywhere. So that's the one.
And so that's kind of where it goes back to, right, James? Is like what we were just saying. So when you buy that piece, that beautiful property, let's say an acre of land, and you only have the 1,200 square foot bungalow on it, that's worth $1 million. You're not going to get $1 million on the home replacement cost. That's not how that works. So obviously, please give us a call. We'd love to explain your situation a lot more thorough if you have an opportunity to do that, so it makes sense. But the idea is to put that 1,200 square foot bungalow back on the exact same piece of land. What's it going to cost the insurance company to get you back into that place, right? And that's where a few other small talking points, which might be a good segue, is people don't always know part of that replacement cost is also for debris removal. So an insurance company will typically allow, I think, between 10 and 15% of what your home's replacement cost is, to obviously remove all the existing debris from the claim. So obviously, a fire loss is a perfect example. you're going to have, literally just a home of brick and rubble sitting there that the insurance company pays to remove. And then at that point, they have to go through the process of rebuilding the home. Now, obviously, James, neither one of us are claims adjusters, right? So we can only explain so many things. But I will say that, our job is to make sure that the actual rebuilding cost you have is sufficient for what your home should be insured for. And that's been the whole basis of this
100%.
conversation.
And that's like, honestly, even sometimes I forget that too, that the debris removal is actually a huge portion of your home insurance, because it costs, like, the debris doesn't just get up and go away. Like, it's there, and it costs money to actually like remove it and remove it properly, because depending on what kind of home it is and how old it is, there could be materials that we don't use in today's day to build homes, right? Like, there's definitely homes that still have like asbestos and all that kind of stuff in, like lead pipes, like what's the other one, that knob and tube. Like, there's homes out there that obviously have this stuff still, and you can't just be like, okay, we're gonna just throw this in the dumpster and like adios. Like, there's obviously environmental like impacts to just dumping it, so they have to be dumped properly. So even for myself, that's a huge thing that I always kind of never really think about until I'm like, oh wow, like the debris actually does cost. Like, there's times where I've seen where like debris can cost anywhere from like 10 to 25, even $50,000 just to remove from the location, which is huge.
Yeah, yeah, and on top of that too, and this is something maybe the common client and even ourselves, when you're rebuilding something yourself or doing, like, let's say a basement reno, as I'm going through right now, or if you're building a home from scratch yourself, one of the things that no one ever considers is just labor costs in general, right? So if we're putting in like the sweat equity that everyone refers to it as to do things yourself, you're basically only at that point paying for the materials cost to rebuild. An insurance company obviously does not have that luxury, right? They are paying for, whatever contractors are then brought in. You also have to remember that it's a specific timeline, right? The idea is to get those clients back into that home as quick as possible. Now, obviously, a total fire loss is a catastrophic thing. It's not going to be easy for the clients. They're going to go through a lot of, a lot of pains there, losing all their stuff, and it's going to be a horrible experience. And it doesn't happen overnight. The rebuilding of that home, could take 6 months to a year, right? It doesn't just go up in a month. So there's a lot of things included in that kind of, again, we will go back to it, but that rebuilding cost that the insurance company is making sure they're covering. So it's, again, it might seem in some cases to seem overinflated. And I've had clients that say, Mike, I have a 1,000 square foot bungalow, a slab on grade, no basement. I mean, this home is 200,000 and, you have $350,000 on it. So there's obviously examples where it's actually more than what the current person perceives their home to be insured for, which is a completely different talking point than having on the lower side.
A big point you just brought up that I want to kind of touch on very quickly is you just said labor costs. And I don't know if anyone's been listening to the news recently, but almost every skilled labor field that I can think of right now has been either on strike currently or has been on strike at least in the last 6 months. Because I know so many friends, so many family members that work in the skilled trades, and almost all of them are on strike, or if not, have been on strike in the last 6 months, in Ontario at least, because they are trying to get wage increases. So obviously, if they get wage increases, this is obviously going to increase rebuilding, because you can't just keep your costs at the same level and bring this guy in for $25 an hour when he's now asking for 40 or whatever it might be, right? So that's a huge news point that a lot of people, and I just kind of thought of off my top of my head, because like I said, I personally have friends and family that work in these areas, and a lot of them, like I said, have either been on strike in the last 6 months or currently are on strike. And if they, like I said, they've most of the time have gotten the increases they want, which are usually gradually placed over like a 3 to 5 year period. But again, in 3 to 5 years, when they go from $25-$30 an hour to $35, $40, $50, whatever it is, obviously we can't keep the rebuild costs and the rebuild amounts at what they are, because the labor is now increasing X amount too.
Right, right. And that's a huge thing included again in that cost, right? The insurance company is paying for that. You are not paying for that as a client. So actually, the one it's a good little segue, but I think it's a spot that me and James both agree on, and everyone should have for home insurance. There is a specific coverage called, we refer to it as GRC, which is guaranteed replacement cost. Every insurance company, I believe all standard markets,
Yeah,
I'll say, do offer this,
I don't
and it
think
is
anyone
some,
doesn't offer it anymore
yeah,
unless they don't qualify for it. I'm pretty sure every market has it now. At least any markets that we work
yeah,
with have it. And there's like obviously qualifications for it, but it's really hard not to qualify for it. Like personally, like I think like if you're going to offer guaranteed replacement costs, like I don't even see a point of giving an amount for the rebuild because it's confusing. I find a lot is confusing for clients because you're going to give them like let's say an amount of like $300,000, but you're going to guarantee to replace it. So what's the point of giving the 300,000? You know what I mean? Like I personally don't understand it very good because I just even as a consumer, like I'd be confused. Like, okay, you're telling me you're going to replace it up to 300,000, but then you're going to give me a guaranteed replacement cost to replace it exactly how it was prior, even if it goes over 300,000. So is it really just
yeah,
like you were saying before? Is it just an inflation protection basically? Because you don't know, like if someone just has this policy for 25, 30 years and it never like it increases slightly, but the inflation increases faster in the market than on the actual insurance policy. Is that really just an inflation protection realistically? Like what do you think about that?
yeah. Ultimately, the majority of what you pay for in your premium it comes from like that base rate of the home, though, right? So I think the way that the insurance companies typically view it is that obviously you have to have a very kind of current, up to date evaluation of that home, whether it's every 5 years or whatever the number might be, right? It might differ between brokers too, but that number's at least got to be relative, right? And that's where the insurance company gets its premium from the clients, right? No one's gonna insure a home for if it's, let's just say, use a number for example's sake of 400, but when you do that evaluation, it should be 7. Well, clearly there's been a drastic disconnect somewhere, right? The client either maybe didn't know about what the overall square footage is, but as professionals, we got to do that with those evaluation tools often enough where we're kind of current to where it needs to be,
Yeah.
right? The last thing they want is there to be a claim. This is basically what I was going to get at. The last thing any client ever wants, or even a broker from like an errors and emissions standpoint, is there is a claim. The insurance company says, okay, guys, we're a little concerned. Home was insured for 400. Doing quick math, we think it's 7. Like, you know what I mean? Like that disconnect is not okay. Whereas I feel that if it's 550 and it takes 600, that's one of those things where things can change over the course of the year, right? Like you said, materials, labor, there's got to be some leeway, especially if you've done a tool the proper way. I think clients and people out there listening that are in the industry, it's got to be relative to what the home is, and just being kind of delusional in a sense and saying, oh, it just increases every year. The insurance company increases at 5%. It's going to be fine. Sure, until the claim happens, and then it's not fine. It's like, oh, we could have done more.
A little tip for everyone too. I don't know if Mike uses this, but I've kind of found to use this very effectively. But a very good way of kind of figuring out if like square footage on a home is like accurate from what the client's telling you, go on Google Maps, and if you do the overview, you can actually measure out the overview of a home. So it'll kind of give you a rough estimate. Like I'm not saying use it like to like the T, but you can really look and see like if someone's giving you like the correct amount of square footage compared to what's showing on Google Maps. So any brokers or anyone out there that might need a tip, there's your tip for the day. Use Google Maps to map out homes to see if the square footage is accurate.
Especially, I'll add a little note, especially more for rural properties. You're not going to have that problem, or at least I've almost never had that problem for like more urban homes, right? Because obviously with Easy ITV and a few different things that we use in the industry, we have the ability of being able to I mean, unless someone just done a massive reno or an addition, and for some reason it's not updated, right? Which does
Yeah, it
happen from
always
time to time.
happens.
But I mean, if you look at a home on Google from Street View, and then you can also confirm with the client quickly, and it takes like 2 minutes, you're going to have a great idea of how big the home actually is. It's not. It should not happen that you're undervaluing it by
Yeah,
2,000 square
exactly.
feet ever.
So, kind of moving forward, like what do we see? Like, do we see these costs continuing to increase? Like, I think this might be like a silly question, and I think a lot of other people are probably going to say this is a silly question, but like, is this always going to increase because of like kind of the world that we live in now, where like the supply demands are really not coming back to where they were prior to COVID? Increases in wages and people being more like kind of like mindful of like paying people properly. Like, are we really ever going to see rebuilding costs ever come back to like even prior COVID?
I mean, if I had a crystal ball, this would be such an easy
Wouldn't
question to answer
everything
for you.
be?
I right, but I mean, yeah, it's tough to say. I mean, I have no idea. It would be nice to say, things are going to come back down to, a couple bucks for a 2x4 instead of 9 or whatever it is now. But if it does, I mean, I think you might see a little bit of a shift with the rebuilding. I mean, at least that way, it's with inflation, it's still relative. But with respect to insurance, I mean, you never want to. I don't think you're going to see a spot where home insurance not premium, sorry, but rebuilding costs decrease, right? I've never seen that happen in my
No,
past 10 years so
I don't
far in
think
the
I've
industry.
I've never seen it either. But like, how do we? That's a question that kind of begs like for an answer almost, is that like how do we allow the increase on rebuilding costs to continue to increase without home insurance getting so out of hand? That's the problem, right? Where do we connect those two to make sure that home insurance isn't just skyrocketing for people as rebuilding? Because realistically, the supply chains and distribution centers are just not getting back to where they were prior. And if you walk into any Home Depot, Lowe's, Rona, any of your kind of home hardwares that you can get rebuilding like materials, you can see like even before COVID, it was gradually going up, but during COVID, it's just been absolutely like insane. Like the one article that I was reading, that it said from 2019 to 2021, there's been a 400% increase on lumber. Like, that's just crazy.
Yeah. I mean, it does go back to that, supply and demand thing, though, like you were saying, right? I mean, everyone's been cooped up for 2 years. I mean, it feels like everyone you talk to is adding on decks or pools or doing renos to their house in some way. I don't know if it's just all this disposable income
And
that
people
somehow
people
people
aren't
have.
traveling. That's the thing, right? So they sit at home and they pick through
Yeah,
every little thing they don't like about their home because they haven't traveled in 2 years, and now they want to do all this stuff. But then now everyone wants to do all this stuff, plus the supply shortages. Like, it just everything's kind of increasing, right? And that's why you're kind of seeing home rebuilds are just absolutely outrageous right now. And like I said, like personally from my standpoint, I just don't see how we see a decrease in this. I think you're always going to see rebuild costs increase just based off of kind of the market that we're in. Everyone's being, like I said, everyone's kind of being more mindful of things, like making sure their employees are paid well. And like a lot of people are going like eco-friendly, and unfortunately eco-friendly right now is really just not affordable for a lot of people. So if you do go that route, you're obviously going to pay more, and if you pay more, obviously your rebuild costs are going to go up. So I think just a lot more people are mindful of things. And I think a big thing is people need to be mindful of their actual insurance policy to make sure that they are being covered properly, because the biggest thing is you don't want to spend all this money, and then at the end of the day, like if there is a claim, like was it last year? When was the Barrie tornadoes again? Was it last summer or was it summer prior? It was last summer, right?
no, that was just in
Yes.
the last year
So
for
look at
sure. I mean, I don't have the exact date, but I want to say like almost, yeah, it was
Yeah.
just in the
So
last
look
year
at
for
that
sure.
instance, for example. Like, when was the last time a massive tornado like that hit in Ontario? And like, I'm reading a report right now from iSure that's saying that that tornado that hit in Barrie has cost the insurance companies $100 million. So at the end of the day, you don't want to be that person that just like insured their home for like the bare minimum possible, because like I said, home insurance is regulated, but it's not as regulated as auto insurance. So you have to really make sure that you're getting the right coverage, because there's a lot of coverages that you can take off, add on. So you want to make sure the right stuff is there. But again, like who could have predicted that this kind of like huge weather event would have happened? And now it's going to impact, obviously rebuild costs, because you have to rebuild almost $100 million worth of homes in that area.
Yeah. It's one of the big things, right? One of the big challenges in the industry is how do the insurance companies combat these larger catastrophic weather events? What are they willing to insure against, or what are they not willing to insure against? And that's something I've seen change even over the last 5 years and stuff, right? With water and a few big things that either come to the policies or B, are excluded from insurance policies, right? And again, what is the line, or where is that area between whether it's going to be covered or not? So it's super important. I think the biggest thing will be to, if you have questions, make sure you're talking to your agent or broker about certain things.
Always just
right?
ask
Don't
the question.
wait for it to happen.
Always ask the question. Like if your broker is really there to protect you and really cares about you, no question is smaller or big for them or stupid, because a lot of people think their questions might be stupid, but they're not. Just go to whoever you trust. Come to us if you trust us already after 2 episodes, which I hope you do. But just ask the questions, because at the end of the day, if you don't ask the questions, you're never going to know, right? So I think that's the biggest thing. Just ask your questions to whoever you trust that takes care of your insurance, so that at the end of the day, if something happens, you know you're covered. Because I find a lot of people just don't. They just buy or purchase whatever they are offered premium based, and at the end of the day, like if something actually happens, there's no coverage for it, and then they're like, well, why am I paying for this if nothing's happened? Well, you didn't ask the questions. But again, it's kind of a two-way street. Like, it's on the broker too, but there's only so many things that the broker can go over if we don't know. Like, if we can't read minds. Like, we don't know what you're thinking. If you have questions or if you have concerns about stuff, like, we're going to obviously explain everything to our best ability, but at the end of the day, like, if you have questions and don't ask them, like, we can't read your mind if you had that question.
One of the big things too that I think is super important, especially for home insurance, is just making sure that, if you are comparing things, having a copy of your policy there and kind of allowing, that apples for apples comparison, super, super important, right? Because there are a couple different features, especially with water coverages more specifically. I know that'll be a different topic at some point in an episode. I like water. I love talking about water, so that'll be one of my favorite ones. But it just making sure you have that policy available, because like James briefly mentioned, like home insurance, like we just talked for the last half an hour, rebuilding costs will be different on every single person's insurance policy. Their home, even what it is to their neighbor's home, it will be different, right? What you pay for your home insurance absolutely will be different. It's not going to be the same even as a neighbor. And there's a lot of common misconceptions 100%. There as well. So yeah, just make sure you have a copy of your policy, and when it renews, or whether or not you're doing a new quote with someone, asking thought-provoking questions. We are obviously the professionals, so I'm gonna whenever I talk to someone on a piece of new business, there's going to be certain things that we definitely discuss, and it's interesting actually how many times someone will say, "Oh, I've never been asked that," or something very similar to that extent, right? Oh, that's something that I just assumed was there for 20, 30, 40 years, right? So I think there's a lot of assumptions in our industry, James. I mean, there's a lot of assumptions on home and auto insurance, but there's a lot of this kind of idea that when you pay for home insurance, and I should say car, but home because of this topic today, when you pay for it, it's all encompassing, right? You have every type of loss you could imagine, minus maybe a few exclusions that people might already assume are not included, but that everything else under the sun is covered on your home policy. And it's not the case, right? There are lots of ways that you can help reduce your own premium by removing things, but you have to know what you are removing in order to, to save that premium dollar.
Exactly. But I think to kind of summarize this whole thing is just make sure that you're really aware and kind of disclosing things when you're doing a quote, especially for the rebuild cost of things, because with everything increasing over the last 2 to 3 years, like obviously that is going to increase a lot, and your home insurance, if you haven't seen already, is probably going to increase, and it will continue to increase as we kind of have the supply shortage. And like I was saying, just because your real estate, you're paying X amount for it, doesn't mean that the rebuild cost should be that amount, because realistically, you still have to look at the land value. There is obviously tons of land value in whatever you're buying. It's not just the property. We always like to think that my home is worth $2 million, but realistically, like your home is probably only worth like 700, and the land's probably 1.3 million, depending on where you live. It's not always the case, because if you're living way out in the middle of nowhere, your land might not be worth as much because you're not in like a big city, and the property might actually, or the building on the property actually might be more than that what the land is. But usually in the city, your land's probably worth a little bit more than what your actual building's worth.
Any other last thoughts, James, you want to give everyone before we leave them today?
I don't think so. I think we kind of covered everything. I just kind of summarized my kind of key points. I just, like I said, I would just be mindful and make sure you're comparing apples to apples. Don't compare apples to oranges. Make sure you're sitting next your policy that you have, and if you're doing a new quote or whatever you're doing, or from renewal to renewal, make sure you're looking at it even briefly. Give it a 5-minute glance. Just be like, hey, this is the same. And if you have questions, just ask them. Because like I said, from year over year, even from the renewals that I see, even if there's like a minor like 5% increase on rebuilding costs, I'm going to be like, listen, like this is why your stuff's increasing. It's based off this. Your rebuild is increased by 5, 6, 7% or whatever it is. So just be mindful, I would think, just going into a renewal or shopping your insurance around, just make sure you're being mindful and you're comparing apples to apples.
Always the best way to end it. I love comparing things the same way. That way, at least everyone knows where they stand at the end of that conversation.
You know what? I know we haven't talked about this personally, but I think for next week, I really want to kind of chat about the climate side of things for homes, because I think that's another huge portion that we kind of chatted about at the end of this, that I really want to dive into a little bit more deeper, because that's another huge portion of the home insurance side that people, even on the car insurance side, people really don't realize is that like our like climate change is impacting a lot of things, and home insurance is a huge one. Auto insurance is too, not as much, but I feel like there's so many things that people kind of overlook, and they're just like, whatever, like it is what it is, but realistically, it is going to have a major impact moving forward. So what do you think about doing climate for next week?
I love it. We can get into the water stuff, which is right up my avenue that I love.
You're a big
I love
water
discussing
guy,
it.
aren't you?
I love the different types of water coverage. I know it's impossible for consumers to understand it to some extent, but I love chatting about the different types, and every company is different there too. So that'll be it. There's talking points for that.
Awesome. Well, we appreciate you guys tuning in to episode 2. This was recorded May 19th, so it will be out the following Tuesday, which is the 24th. So it's the Monday, or it's the Tuesday after the long weekend. So we hope that you guys all had a good long weekend once you guys hear this. And for episode 3, I think me and Mike have just decided on episode 2 that we are going to do a climate change episode. So looking forward to what you guys think about episode 2. Like I said, if you guys have any questions, concerns, or just kind of want to entertain or comment about some stuff, just let us know. You can contact us via our social media, comment on wherever you're listening. The podcast is being added to a lot of the podcast sites as of right now. Currently we are on, let me just get the list quickly. It's growing every day, but I just want to make sure which ones we are actually on for the time being. It is, of course, I type in my wrong password. So we do through Podbean. So we obviously have a website through Podbean as well. So that's basically where I've posted most of our stuff. But then we're also on Amazon Music, which is huge. We're on iHeartRadio, Player FM, and Podchaser. We have a few deals that are going through shortly to get us on some of the bigger and the bigger sites, obviously, but it does take a little bit of time, so look out for that. But we will post them for you guys just so you guys have links to them. But like I said, if you guys have any questions, we really appreciate if you guys would send them to us, and we hope you guys enjoyed episode 2 and looking forward to hear you guys from episode 3.
Enjoy. Everyone have a great long weekend, and we will obviously we'll stay in touch.
Thank you.